It has been a rocky week on Wall Street and for global stocks as uncertainty over Donald Trump's latest tariff move sent Wall Street into a frenzy. A sudden shift hike, well, on the Canadian steel and also aluminium rattled investors with conflicting signals from the administration, leaving markets on edge. Traders now bracing for more economic uncertainty, and all eyes have been on inflation data, which came out pretty good. For more, let's head to Melbourne. We're joined by Thomas Atkinson, Chief Market Analyst at FX Evolution. Great to have you here on Ticker, Thomas.
Great to be here. Thanks very much.
How would you describe the week that has been? It has been a lot of whiplash. How have you looked at it?
Probably looked at it as liquidation, frankly. I think the key levels that we've been losing really do hurt a lot of traders and investors. And obviously the big one was the S&P 500 with the 5,700 level, which has been a line in the sand now for quite a few sell-offs over the last year and also during 2025. As soon as we dropped that, we just saw puts everywhere, which is, of course, options hedging to the downside. And effectively, it forced a lot of dealers and hedgers to actually start to do some hedging themselves. And that, of course, feeds upon itself. It's what we call like a waterfall effect. And that's why we got such a violent move on Monday. It was just a culmination of all this leverage getting liquidated, and of course a bunch of hedging having to occur. So we've stabilized a little bit for now, but of course we'll be talking, I'm sure, through today our opinion on what's next to happen.
Yeah, well, the waterfall approach, I really love that term. Talk to us about stocks, because they've made some recovery, but do you think something bigger is at play here? Do you think that this was a case that Wall Street didn't believe Donald Trump, that he would do what he said he would do, but now he has done it in terms of this trade war, which has kicked off, Europe and Canada now retaliating as well, that something bigger is at play?
Yeah, so obviously with the look of the tariffs, we've got, of course, them being actually implemented. A lot of people would have thought that at the 11th hour it would have been implemented and quickly taken away with some kind of proxy deal, I guess, to be done. That has not happened, and obviously now we're seeing retaliation tariffs, and this is kind of starting to escalate. So how the market looks at it is, I think the market was already selling a little bit into the event. Of course, now that we're seeing this sticking in terms of it's actually been put in place, it's really going to be now how long does it stay in place? Because the longer it stays in place, the more the market is going to take action, and that action is going to be probably price action and hedging towards the downside. So the way that I see it is that at this stage, it's really just come back to the market has probably got ahead of itself in terms of selling off. It's come down to a couple of good key levels. We've got what we call exhaustion, I guess, in these markets. And one of my favorite indicators, the DeMark indicator, is actually now showing a TD13, which for anyone in the technical world would know is a very exhausted market on the sell side. So yeah, I think we're getting a little bit of stabilized recovery. I could see things starting to improve. And what you're always looking down here as traders and investors is you're looking for structure. So you're basically looking for the market to find a bit of a bid, to start to build a few days of potential formation in these markets, and then show that there is someone actually willing to buy, because there just has not been anyone willing to buy. In regards to tariffs, though, I just think that it's all about how long do they stay in, and every week that they stay in will start to affect the markets.
It's interesting because US CEOs aren't openly questioning Donald Trump's strategy, yet we think about some of those tech titans who stood behind Donald Trump at the inauguration. They've now lost about $240 billion in combined value since the inauguration there as well. Do you think that analysts and investors have fully comprehended Trump's economic plan? I know it's hard to predict the future. My question is, the drops we've seen this week, 900 points on Monday, 400 points on Tuesday, a bit of a recovery on Wednesday, a bit of a recovery today. But having said that, do you think that they've priced in those drops the full extent of what could happen over coming weeks when it comes to retaliatory measures?
I don't think so. I think there's two things going on in the markets right now. We've basically got one expectation, the deregulation and, of course, tax cuts, corporate tax cuts are going to come to America, which is the hope. That is, of course, what the corporate world is really looking for, and also the stock market. That is the positive side. And, of course, we haven't heard as much about that recently, but I think that's what they're holding out for. And then you've got the tariff side. What are the real deeper impacts to arguably one of the biggest trade routes? Well, it is a big thing for, obviously, Mexico and Canada, massive trade partners with the US, and how that's going to have impacts, plus the rest of the world. And then of course, on top of that, you've also got some concerns about even firings. What the biggest employee is technically the government. So with what Doge is doing, like what is that going to have as of impact? Are these people going to be able to find employment? One of the interesting stats I saw recently was that unemployment is obviously going up a little bit, but the thing was that people are finding it harder and harder to find jobs. And people are less likely to switch in jobs right now in the US because they know that it's getting a little bit harder. So it's actually a changed market from what we saw in 22, well, even pretty much 2021, really, which was more of a workers kind of market. Now it's more of a, okay, well, I need to stay in my job and not quit. So how has the market impacted this? I think it's going for, let's hope the positives are there. If they're not, then yeah, we're going to have to start really pricing that in. And at this stage, one of the key levels I'd say look on the charts for would be if you've got an S&P 500 chart, 5475 and 5400, because both of those levels on the way up anyway were incredibly heavily traded. So if we do keep selling here, that's going to be where the market's going to possibly put in a stand. And if we drop those zones, not good stuff. I've got a stat coming up soon that some people want to hear as well about this one.
Well, I mean, the recession is quite terrifying too, the idea. This week, Trump being really careful about it, then he's standing next to Elon Musk for some reason buying a Tesla to shore up Elon Musk's economy. But the US economy is a real concern because post-COVID Americans were still spending, keeping the US economy going. That's starting to slow down, and we're seeing that in CPI as well.
Yeah, absolutely. And this is something I track very closely. A great code that you can track what I call the American consumer with is consumer discretionary, which is XLY, versus XLP, which is consumer staples. Basically, what that shows you is whether the market is risk on and saying everyone's buying stuff, or whether the market is risk off and everybody's kind of going more defensive and trying to just afford those eggs that I believe are like $12 a dozen or something like that in the US, which is just wild. Now, in the way that we've seen that is dropped, like that is absolutely like dropping like off a cliff at this stage, and that usually signals a risk off in terms of the American consumer. So people are tightening. There's no doubt about that. And you mentioned the word recession, which of course has come up many times in basically the last week and a half. I'd say everyone started talking about it. Even Trump is talking about it. And the stat that I wanted to share with everyone is this. There's a thing called the daily 200 moving average, which is very popular with funds, hedge funds, and retail traders. I'm sure most viewers are aware of it. And on the S&P 500 and NASDAQ, we actually went underneath those daily 200s just last week into Monday. And what that actually does is it triggers kind of risk off in some algorithms and mostly some momentum funds. And that's forced, of course, further selling. But the key here is the stat. So it turns out that when we drop the 200 moving average from an all-time high, which we did recently, and a very strong economy, and we haven't been in a bear rut or anything like that, when that happens, 3.5% down, if that happens over the next 2 weeks, well, that has only ever happened 3 other times, and each one of them has been not good. It was 2000, 2008, and 2022. So we all know those periods, I'm sure. And that's a crazy stat in itself. And and unfortunately, 3.5% was dropped in one day, which was Monday. So yeah, that's live, and that is another warning sign. So the US economy is not 22, 23, 24 in terms of the way that we saw that recovery. There are warning signs here, and I think everyone's paying a lot of attention to them, including myself, and I'm sure you and all the listeners.
Yeah, and just finally, talk to us about the ASX as well, because it's been clinging on, kind of on the side of things, going, what is going on? But it hasn't been a good week.
No. So, well, a lot of things happened on the ASX. We had financials obviously up big time over the last 6 months or so. And they started really struggling a few weeks ago, and that's been pushing down. Then, of course, we've got tariffs on aluminium, and I keep saying aluminum because I talk so much to the US, but
I'm making that mistake now as well constantly. I'm reading the auto cue and I'm like, how do I say this?
Yeah. I've forgotten. I've started talking in US language. The way that it kind of looks on the ASX is that we're down around the same as in terms of pure percentage as the S&P 500 in the US. So the way I look at it is we've got 3 main industries. Oil is, of course, falling at the moment. That's a hit to the stock market. Then you've got financials, which after the interest rate cut have actually been kind of a sell the fact. So buy the rumor, sell the fact when the cuts come through. And then we've also got, of course, all these miners starting to struggle a little bit. But I will say this, the US dollar dropping has been really good for metals. So we're seeing copper breaking out, 4.84 at the moment. So that's a pretty good number for copper. And we're also seeing a lot of other metals that I've loved over the last year, particularly gold and silver breaking up as well. So there are some bright spots in the Australian market. I would say that the precious metal side and possibly some metal sides could be rising, actually.
Time to polish the silver and buy the gold. Thomas, really appreciate your time. Thank you.
Thank you so much.